There's an important rule in the world of investment. Risk and reward goes hand in hand. It means you can't expect highest return at lowest risk. And one of the biggest mistakes many people make in the stock market is only looking at multi-bagger returns while completely neglecting the risk aspect. No wonder majority of new investors in the stock market only want small cap ideas or penny stock ideas that can double their wealth in no time. Now when there is a bull market, the small cap stocks or penny stock could jump multifold times. But when there is a bear market, those small cap stocks or penny stocks would also fall drastically. Now post-COVID, there has been a bull market and the small cap sector has outperformed the large cap sector. But remember that when there will be a bear market, which is inevitable, the small cap sector would fall more because of small cap sector has this high beta, that is high volatility. And hence, it is very important to build a balanced portfolio with right set of large cap stocks that can provide a consistent compounding. Sure, these large cap stocks might not jump 50% or 100% in quick time, but they will also not fall 50 to 60%. And that means large cap stocks balances your risk versus return profile of your portfolio. And trust me, even if you fetch 15 to 20% return yearly, you will make a fortune in the next 10 years. Another important reason for having allocation in large cap stock is that 2022 would not be like 2021 and this year can remain very volatile. One of the reasons is that the inflation rate in the US is at an all-time high. In fact, as per recent news from Forbes, inflation in the US in December has spiked 7%, reaching at an all-time high in 39 years. And it is expected that US Fed would increase the interest rate in 2022 multiple times to control the inflation. This would directly impact the stock market in India as well. So in such scenario, it is very important to diversify across categories and have exposure in top-notch stocks that can balance your risk versus return. So in this video, we'll discuss 10 large cap stocks to invest in 2022. Now as far as small cap stocks are concerned, I've already created a video on top 5 small cap stocks for 2022. If you haven't watched it, then I would strongly recommend watching it. Alright, let's get started with our list of top 10 large cap stocks. First stock in my list is based on two big themes for the future: digital revolution and green energy. It is none other than Reliance Industries. The world around us is transforming quickly with technologies like IoT, cloud computing, automation, AI and ML and so on. And Reliance Jio has fueled this digital revolution in India with its high-speed internet connection. Thanks to Jio low-cost data, today India has world's second largest internet user base, consuming terabytes of data on a daily basis. This has been a key catalyst towards the growth of e-commerce companies, edutech companies, fintech companies and so on. Not only Reliance is the leader in telecom business, this business has very few players with very high entry barrier due to high expenses. So Reliance is going to benefit a lot from this digital revolution in India that has immense growth potential. There are also discussions around Reliance Jio IPO in 2022. So that would be an interesting space to watch. Now Reliance has not only planned the business transformation for the few years, but it has probably planned the transition for the next few decades, if not centuries. Once a major oil company, Reliance is now transforming itself not only in digital space, but also in renewable energy space, which is the future of energy. Reliance has recently signed an MOU with Gujarat for a total investment of 5.95 lakh crore over the span of 10 to 15 years to set up 100 gigawatt renewable energy power plant and green hydrogen ecosystem development. Last year, Mukesh Ambani has already announced the setup of 4 gigafactories in Jamnagar to build an entire ecosystem around renewable energy production and transmission. I have already covered this in one of my earlier videos. Reliance has also acquired a UK-based sodium-ion battery manufacturer for 1,000 crore rupees for electric car battery manufacturing. In short, I see tremendous potential in Reliance for the next few decades. Currently, it is available at rupees 2,500 at a PE ratio of 32. That looks reasonable to me. Next two stocks in my list are from banking sector. Now the economy is recovering post-COVID. Banking sector is expected to benefit from this recovery. Also, from valuation perspective, banking sector is trading at an attractive valuation as compared to other sectors. Now that there is a new capex cycle across industry on account of various government initiatives and new business opportunities, banking sector would be a direct beneficiary from it. And within banking sector, the well-managed banks with low NPAs and strong distribution would continue to capture more market. So in this list, I have two stocks in large cap category, ICICI Bank and HDFC Bank. Both banks are the leaders in Indian private banking system with neck to neck competition, and both banks are growing at a very good rate. In last 3 years, ICICI Bank profits have grown at a CAGR of 34%. Whereas HDFC Bank profits have grown at a CAGR of 20%. In terms of NPA, both banks' NPA are well under control. ICICI Bank latest NPA stood at 0.99%, whereas HDFC Bank NPA stood at 0.4%. And as far as valuation is concerned, ICICI Bank is trading at levels of rupees 800 at a P ratio of 26, and HDFC Bank is trading at levels of rupees 1500 at a P ratio of 23. So both banks are looking reasonable in terms of valuation. Next 3 stocks in my list are from IT sector. India has been a global leader in IT services due to its low-cost workforce, experienced leadership, and availability of talent pool. In fact, post-COVID, every major company is now focusing on digital transformation, and the leader in the IT sector are growing at a very good rate and also have a very good order book for coming quarters. Especially the focus on newest technologies like cloud computing, AI and ML, blockchain, advanced analytics, IoT, automation, and so on. These technologies are growing at a rapid rate, and hence the IT sector in India has a bright growth prospect. So my pick in this IT sector is TCS, Infosys, and HCL. Again, all 3 companies are global leaders with strong management, global presence across the world, and very strong brand value. All these companies have solid financials, including good growth rate, high profitability, negligible debt levels, and huge amount of cash to invest in future technologies and building the talent pool and potential acquisitions. These IT companies are one of the biggest wealth creators in last few decades and would continue to be a consistent compounder. All 3 companies have announced their latest quarterly results and the performance has been good. Infosys reported 22% year-on-year jump in revenue and 12% year-on-year jump in profits, whereas TCS reported 20% year-on-year jump in revenue and 12% year-on-year jump in profits. HCL reported year-on-year jump of 15.7% in revenue, but year-on-year profit growth was negative due to different taxation. But there is 64% year-on-year growth in deal pipeline of HCL. As far as valuation is concerned, Infosys is currently trading at rupees around 1800 at a P ratio of 35. Then TCS is trading at around 3800 at a P ratio of 37. And HCL is trading at around 1170 at a P ratio of 29. 7th stock in my list is based on the theme of infrastructure development. Indian government has a lot of focus on infrastructure, including building the highways, flyovers, rail network, airport, ports, and so on. And one company that is the leader in this sector is L&T. It has been among the leader in various sectors, including construction, heavy engineering, mining machinery, defense shipbuilding, metallurgy, and so on. Just to give you an idea of scale of L&T, by Q2 of FY22, company had an order backlog of 3.3 lakh crore rupees. In Q2 of FY22 itself, L&T has bagged an order worth 42,140 crore. So I am very bullish on this bright growth prospect of L&T. It is currently trading in the range of around 2,000 rupees at a P ratio of 32. Now, 8th stock in my list is from the theme of consumption. By 2030, it is expected that India is going to become the 3rd largest economy in the world after US and China. And one of the biggest driver in India's growth journey would be consumption. And when it comes to consumption, one sector that is recession proof is FMCG. Because no matter what, people would continue to consume the basic stuff like soap, shampoo, toothpaste, detergent, and so on. And one company that is the leader in FMCG sector in India is HUL. Some of the brands include Dove, Close-Up, Surf Excel, Lipton, Kissan, Vim, Brooke Bond, Domex, and the list goes on. HUL has been a consistent compounder for years due to its huge list of 50 plus brands across beauty and personal care, home care, food and nutrition segment that rules the Indian FMCG market. In fact, 9 out of 10 households in India uses one or more product of HUL. Today, HUL products are part of every retail store in the country, and that gives HUL one of the biggest competitive advantage due to its strong brand name and distribution network that it has built in India in the last 80 plus years. Company has a very strong leadership along with a very profitable business model. In fact, HUL is one of the most profitable company in country with very high ROE and ROCE. Although its stock price has been stagnant in last 1 year as it was trading at premium valuation and there was a slowdown in entire FMCG sector. But HUL is one stock that will consistently create wealth for the investors in the future. Currently, it is trading at levels of rupees 2,300 at a P ratio of around 65, which is lower than its last 5-year median of 68. Now, last two stocks in my list are contrarian bets. I am bullish on the revival of the auto sector in India that has struggled a lot in last 4-5 years. Although now the focus is completely towards electric vehicle segment and market is rewarding companies that are leading the electric vehicle revolution. But one stock that has been a leader in Indian two-wheeler auto segment and has not performed in last 1 year is Bajaj Auto. I strongly believe that just like Tata Motor was able to turn around his story, two-wheeler segment leader like Bajaj Auto will eventually cope up and will show good performance in the near future. Bajaj Auto has already launched the electric version of Bajaj Chetak, and I believe that it is a matter of time when Bajaj Auto will bounce back. It has been a very profitable company with very strong leadership and has been a very popular brand in every part of the country. It is currently trading at levels of rupees 3,350 at a P ratio of just 15 that looks undervalued. The stock has corrected almost 20% from the peak of rupees 4,000. That has made this stock very attractive at current valuation. So my ninth pick is Bajaj Auto. And my final pick is probably the most trolled stock and probably the biggest meme stock of India. It is none other than ITC. Over the last 5 years, one stock that has tested the patient level of investor, then it is ITC. In fact, in last 5 years, ITC share has corrected around 15%. And hence, ITC is not a cup of tea for every investor. You should invest in ITC only if you have the appetite to hold this stock for the next 5 to 10 years. Unfortunately, very few investors have that kind of holding appetite. Now, I don't want to discuss a lot about ITC as I've already created an in-depth video in the past, but at a high level, you should know that ITC is slowly transforming itself from being a cigarette company to an FMCG company. Over the last 1 year, it has launched 100 plus new products in health, hygiene and convenience category. For example, in health and wellness category, ITC has launched Ashirwad Organic Atta and Dal. In convenience category, it has launched Ashirwad on-the-go range of instant foods, ITC MasterChef all-purpose gravy. Then in health and hygiene category, it has launched Cevlen mask, germ protection wipes, disinfectant spray and so on. So personally, I am bullish on ITC for long-term wealth creation. It is currently trading at levels of 220 at a P ratio of 19. That makes ITC undervalued stock. And let's not forget that at current levels, ITC dividend yield is around 4.8%, which is as good as FD. So you get both benefits of dividend and price appreciation. But like I said, you need to have an appetite for patience to invest in ITC. So this is my list of top 10 large cap stocks for 2022. It includes Reliance, ICICI Bank, SDFC Bank, Infosys, TCS, HCL, L&T, HUL, Bajaj Auto and ITC. Please note that it is not the only list of top large cap stock. There are many great companies in the large cap sector, but I have also focused on valuation. In case you are someone doing SIP in stocks, then let me share 8 more names in the large cap category where you can invest your money. First is Divi's Lab, as it is the leader in API segment in India and overall pharma sector would continue to see good demand in the future. Second is Titan, as this company would benefit a lot from the consumption theme in India. As the spending levels are rising, there's an increase in discretionary spending like jewelry, watches, eyewear and so on. Then third is Asian Paints, that would continue to benefit from the infrastructure development in the country. Asian Paint is an undisputed leader in the Indian decorative paint category and would continue to do well in the long term. Fourth stock is Bajaj Finance, which is a leader in Indian NBFC segment. Fifth is Pidilite, which is again an undisputed leader in the adhesive segment with brands like Fevicol, Fevistick, Dr. Fixit and so on. Sixth stock is HDFC Life, that would benefit from the high demand in life insurance sector, especially after COVID, and the fact that life insurance is still underpenetrated in India. Then seventh stock is Tata Motor, that would benefit from the EV revolution in India. Tata Motor is already leading the EV cars in India and the future is looking bright. And the eighth stock is Tata Power, that would benefit from the green energy revolution in India. Tata Power is again among the leaders in power generation from renewable sources. Although I found these stocks expensive at current valuation. But yes, you can invest in these stocks either in the form of SIP or any dip in these stocks would also be an buying opportunity. Now tell me, which is your favorite pick in the large cap category? If you want to learn more about stock picking and investment, you can explore my complete course on money management. I'll see you in the next video. Till then, take care.